With all the volatility in the Texas housing market right now, I've been hearing a lot that you can't find good cash flowing deals anywhere in the entire state. But today, we're going to put that theory to the test. Hey everyone, it's Dave. And today's video, I'm going to issue myself a challenge. I'm going to give myself exactly 20 minutes to find a cash flowing deal in a market that is likely to appreciate. And I'm going to show you exactly how I'm going to do that. So I'm going to press play now, and we're going to see how this goes. I've never done this before, but I do look at a lot of deals, so I think I can do it. First thing I'm going to do is I'll share my screen with you all and show you this spreadsheet that I use when I'm trying to identify markets. When you're looking for a market, especially in a state as big as Texas, what you want to do is just start with every market possible and then just filter down. So first thing I'm going to do is just get rid of all of the states that are in Texas. That seems like a logical thing to do, right? And then I'm going to just get rid of some of these smaller markets where we don't have data for it. We don't have everything here at BiggerPockets. I'm going to just focus on some of the bigger markets here. Now, when I look for markets, there are three things that I usually look for first. I want to see population and household growth because that is a good, strong signal of demand in that market. I also want to see good economic growth, and I want to see a decent rent to price ratio, which is a proxy for cash flow. So first things first, I'm going to look for population and household growth. And what I'm going to do is just look over here. I'm going to scroll over here. You can see 5-year population growth, 1-year population growth. And I care mostly about the long term. So what I'm going to do is put a filter in here. I'm going to say greater than or equal to 0. So I basically want to make sure that the markets have been growing. That omits just one city here. And we're still left with, how many is this? We got 9 markets left. All of these have decent population growth. I'll just point out that Austin obviously stands in its own class here at 15%. But Killeen, I've actually been here. Killeen, Texas is over 10%. A lot of these are really good too. So we're seeing good strength across the board. Next, when we go to job growth, so we're seeing good positive job growth in every market and good income growth. The only one that stands out here to me is Lubbock as being a little bit low. We also see College Station as being a little low. I'm not going to omit them right now because actually, even though that income growth, look at College Station as a super low unemployment rate. Same thing with Lubbock. So I wouldn't omit them, but it is something that I'm going to keep an eye on. The next thing I'm going to look at here is the rent to price ratio. And just from experience, I know that markets where it's below like 0.6, 0.65%, we're unlikely to find cash flow. And so when I look at this, I actually, because I only have 20 minutes, and let me just see how many minutes, I have 17 and a half minutes left. I'm going to eliminate some of these and just focus on these top 3. So I'll just do greater than or equal to 0.65 and apply that filter. And so now we just have McAllen, Texas, El Paso, Texas, and Houston, Texas. And I'm going to look at a couple things here to just decide which. I'll probably look at 1 or 2 markets here. So first thing I like about McAllen is the price point. At $230 and this really high rent to price ratio, we're probably going to be able to find cash flow. So I like the idea of this. Same thing with El Paso. These rent to price ratios are a bit lower, but with this price point, I think it's still possible. So actually, I'm going to really narrow this down a little bit because what I see here is that for these markets in Houston, it's about flat. El Paso, 1% rent growth projected loss. That's not so scary. But another reason I like McAllen is because the forecast for price growth here and rent growth are both higher than these other 2 markets. So I'm liking McAllen. And when I go and compare it, let's just look at these other places. Good population growth, good household growth. 5-year job growth is exceptional. Wow. Okay. I'm liking 12%. Okay. The one thing I'm going to look at here is vacancy rate in McAllen. That's a bit high. That's certainly something we want to look at. And then I'm just going to look at permits, like how much construction is going on. But it looks fine to me. Yeah, it's a little bit higher, but it's about the same as Houston. So I think it's actually okay. So I'm going to just focus for the rest of this video on seeing if I can find a deal in McAllen, Texas, because just doing this very quick 5-minute market research, it seems like the best market in Texas for finding cash flow, but in an area that is still likely to appreciate. So the next thing I'm going to do is I'll just pull this over here for us all to see is I'm just going to go to BiggerPockets.com. And here we go. And we are going to just go to analyze deals and, I'm going to go to find deals and I'm going to go to on market deal finder. Again, I'm trying to just find an on market cash flowing deal. And while I'm pulling this up, I just want to say, guys, if you're going to do and actually go buy a property in Texas, do more market research than I just did. You should call an agent, call a property manager, look at more data. I'm just trying to see if in 20 minutes I can find a realistic deal and find the best deal I can find in this market. So what I'm going to do is, what was it, McAllen? I already forgot. McAllen, Texas, right? That's where we're looking. Okay, so we're looking at McAllen, Texas. And the first thing I'm going to do here is I'm going to look at our forecast area. So this shows us, this heat map shows us areas where there is likely going to be appreciation and where there's areas that won't have appreciation. And so most of them are about neutral, but I like over here, this is standing out to me. This area is dark blue and there's a couple cheap deals here. This area is okay. And up here is okay. This is going to have positive appreciation. I generally think like if we look, we don't want to look south, and right in the heart doesn't look great. I'm sensing just from this first area that north and west of downtown McAllen might have some of our better deals. And there's a lot of deals here, so I'm going to actually narrow this down a little bit further. But next, I'm going to look at price point, because if you look at this this heat map, you see that their price point, the darker the color, the more expensive it gets. So over here, we're paying higher price per square foot. Up here to the north, remember this was an area with good forecasted growth up here, but when you look at price, it's also relatively inexpensive on average, right? And so again, I'm still liking this kind of area. I think it's an area where we can find good value. I will look at this later. We can zoom in and look at crime rates, but these actually look pretty good. You can see the crime rate, the darker red, the worse. But it's not bad over here. It's all mostly green. We don't have crime data for every area, but like overall, it looks pretty green. So I'm liking, again, this sort of northwest area of McAllen. The next thing I'm going to do is, I guess the most recent thing I was looking for, I selected a house. I'm going to look for a single family house. If there are a lot of inventory here, I'm going to go up to 4 bedrooms because normally the more bedrooms you have, the better potential for rent growth. And I like 2 baths just because renters generally like that. So I'm going to do that. Then I'm going to change this filter here to be at least 1% growth projections over the next year. And then I'm going to look at some of these deals. And what I'm looking for here is a decent rent to price ratio on a property in one of these areas that looks solid to me. So like right now, these 5 are kind of what I'm looking for. So let's just start down here. So this one is $225. It gets $1,805 a month on rent. So that might cash flow. Let's just see what the quality of this place looks like. This looks solid. I mean, it looks recent. Oh, this is a nice place. I think that's virtual staging. I can't tell. That might be real. This place looks pretty nice. So I would imagine you can get good rent for the area. Oh, it is virtual staging. There you go. So this place looks pretty solid. And again, 4-bed, 2-bath. Rental estimate here is $1,800. So that's not bad. I might look at that one. Let's look around a little bit more. Let's see up here, $210. That's a little bit cheaper. So $210, you're getting about $1,600 a month. Oh, my phone is ringing. So I don't love that one. Just because, one sec. Everyone, my phone is ringing in the middle of this video. Okay. So let's just look at it quickly. I don't love the rent to price ratio. It's probably similar to the one I just looked at, but this place needs a little bit of work. So I don't like this one as much as that previous one. Let's see, 230 here. This looks like a nice house. So this is $1,900 in rent and 230. This looks like a super nice house on a really nice lot, well manicured. I'm liking this one. Okay, this one's pretty good. Okay, let's check that one out. 240. This one looks pretty good too. All right, so I think I'm gonna run a couple of these deals and we'll just see which one works. Oh, this one's super nice. I'm definitely running this one. Okay, so that 241 I like. That's 1105 Sycamore. I'm also just gonna look. Sometimes the cheaper houses are better cash flow. So I'm just gonna see what this one looks like, the 175. Yeah, so this one seems like it needs work. So if you were, oh yeah, this needs a lot of work. Yeah, if you were gonna interested in a rehab, maybe look at this one. But I think for the purposes of this video, I'm going to keep this to just places that I think, that are, I would say, turnkey or move-in ready. This one looks pretty solid too. Yeah, I mean, this looks like it's move-in ready. You probably need to put a little bit of money into this thing, but pretty good. And I like the rent to price ratio. So let's start with these two. I'm going to start with this 175 down here, and that 240 up above. So let's just open this. Wait, open. Okay. All right. So the next thing I'm going to do now that I've identified, oh, what was this one? Sneaky, trying to get away from me here. Rent to price ratio is probably not good enough right there. Okay. So what I'm going to do here is I'm going to actually go over to the BiggerPockets. I'm going to go back to the site. And I am going to analyze deals. So I'm going to go to rental property calculator and start a new report. And which one should we do first? It was this one that was 240, right? Yeah. So 50. Yeah, here we go. 5824 North 23rd Street. So I'm going to just put that in here. Here we go. So let's just assume for right now that we're going to pay full price. Actually, it's been on the market for 65 days. So that tells me that it's probably overpriced. Our estimate here is it's right about, but I'm going to just assume that we can get this for 235. You probably can get it cheaper, but for right now, let's just say 235 and our closing costs around 2%. Let's just say it's 4,500 bucks. We're not going to rehab this property and we're going to do a loan, 25% interest rate, about 6.6% right now for 30 years. Then our rental income, what was our rental income on this baby? All right, $2,000 a month. That was 2010. And then we're going to keep moving on to expenses. Now, property taxes, it should tell us here what our taxes are. Where is that? Oh, up here. Yeah, so Texas has really expensive taxes. Look at that, $42.71. So that might kill this deal. Let's just see, $42.71. And then insurance on a property like this is usually like $1,300, so I'm going to assume that. Next, for repairs and maintenance, let's just look this over. I think like this looks pretty nice and like it was recently renovated. Yeah, this is a super nice place. I actually wonder if you can get higher rents for this. So I'm going to double check that in just a minute. How much time do I have left? I have 7 minutes. Okay, I got to go fast. All right, so I'm going to just do this. Repairs and maintenance, 5%. I'm going to do vacancy at 4%. I'm going to do capital expenditures at 5%. Management fees, because I'm out of state, 8%. And then I'm going to skip utilities because this is a single family home. And if I was just doing this, the tenants just pay that. So I'm going to hit finish analysis. Okay, so it's basically break even. Obviously, it says negative 20 a month. To me, that's just basically break even. So this isn't, as assumed. I wouldn't buy this deal because it's a little too thin. If this was in a really good neighborhood and I could get it up to maybe 3 or 4% cash on cash return, and I had good belief that it was going to appreciate, I would maybe consider it. So, like I said, because this has been sitting on the market, like, could you get it for 230? Then it's, it's still break even. So what you would really need to see is one, if you wanted to self-manage, you can, just use the slider here and see that you get about a 3% cash on cash return. Decent, but not amazing. I think the other thing is like, what if you could get $2,100 for rent or $2,200 for rent? I don't know if you can. I'm actually going to just go quickly to this rent estimator we have here on BiggerPockets, and I'm going to just double check some of the rent details here and make sure that I like my rent estimates. So which one was this? North is north. Okay. And then what was this? It was a 4.2. So we're going to do 4.2. And the reason I'm doing this, guys, is because sometimes it gives us the average, but this was a high-end property. But what we see here is that the high end of these rental prices is about $2,100. So I'm not going to increase that anymore. I'm actually going to go back down to about 2,000. And basically, this could be a good house hack maybe, but I think it's just a little bit too expensive unless you could get this deal for, I don't know, 220. If 220 and you self-manage, there you go. Like that could be a decent deal. But this is a little thin for my liking personally. Okay, so that was that deal. I'm going to save these changes and I'm actually just going to go look at this other deal because I have, let's see, how much time? I have 5 minutes left. Now I feel relaxed. All right, I'm going to start a new report and we are going to go to our second cheaper deal. So this was 2109 in McAllen. This is 175 and 1450. So let's plug in our information here. We're going to say that we got this for full price. Actually, how long has this one been on the market? Let's see. 8 days. So let's assume we're paying full price for this one. We're going to put $4,000 for closing costs, loan details, 25% down again, 6.6. We're going to do a 30-year term. And then what did we say? 1450? Let me just double check that. It was, 1450 is our estimate here. And then we're going to go on to expenses. What were our taxes here? Come on, be lower than the last one. Okay, 2276. That's better. 2276. Insurance here, I'm going to just assume $1,300 again. I'm going to use the same repairs and maintenance numbers. And then management fees. Again, I'm an out-of-state investor, so I'm going to do that. And let's just see how this one does. Okay, so this one is break even right off the bat. Man, those taxes really kill you. So let's just double check the rents again and see if this 1450 number is realistic. I'm guessing it is because we saw that nicer property was at 2100. And so we're going to go look here. Which one was this? This was South 31st. And it was a 4.2 also. So let's just see 4.2 search address. Okay, so the median rent. Okay, actually, I think we can get higher here because, like, look at these properties. Like this 4.2 that's really close is getting 1850. This one's 1450. This one's a much bigger house for 25. I actually think so. If we look at the middle, it's about 1850. So 1450 is on the lower end of quality. This place is like decent quality. Let's just see. I don't know. So what I would really do if I was considering buying these deals is call a property manager. But what I'm going to do just for the purposes of this video is like, let's just say we can get 1600. Okay, so now this is reasonable, like almost a 3% cash on cash return. And maybe we can talk them down, a little bit off of this. We can get about a 4% cash on cash return, but I don't know if those things are true. So I'm just going to assume that this deal is like pretty much a 1% cash on cash return deal. For some people, that might make sense. Me as an out-of-state investor, that wouldn't be good enough. So I'm going to just see how much time do I have left. I have 2 minutes left. Let's see if I can find one more deal and do it super quickly. So I'm going to go back to McAllen, Texas. And now what I'm going to do is I'm going to set my price at 200,000 and then I'm going to lower this to 3 beds and see if I can find something cheap because I think something cheap is going to be our best chance of cash flow. So this one looks pretty solid. 120. Oh boy. Is this one? Yeah, that one will cash flow, but it's going to need a lot of work. Okay. I only have like 1 more minute. Let's go. Okay, 134. No, I'm going to do this 161. Let's see if we can get, all right, I like this one. This looks like a pretty decent deal. I'm not going to look through all the photos. It looks, let's see, is it move-in ready? It needs a little work, but it's close to move-in ready. Let's see if we can do this. Okay, view all reports. Leave. I'm going to stop talking because I only have 1 minute left. Oh boy, here we go. Let's go. Purchase. What was it? I can't even remember. Okay, 160. And then we're going to get 1305. Okay, 160. This is going to be 4,000. 25%. 6.6. What do we got? 30 years. Okay, here we go. Why can't I remember anything? 1305. 1305. Then we're going to do, what were our taxes? 737. Okay, there we go. Okay, insurance, we're going to do $1,300. I think we got a winner. 5, 4, 5, 8. Okay, Come on. How much time do I have? 20 seconds. Okay. All right. I think we got it. Here we go. So I have 15 seconds left, but I found a 2.2 cash on cash return. So this deal is as is on the market, a decent deal. If you look at it, it's actually been sitting on the market for 27 days. So if you were to negotiate down this property price to maybe 150, what would we get? That's my timer going off. 4% cash on cash return. So I think this deal, this one, 3616 Westway Avenue in McAllen, Texas, is the best deal I could find in the state of Texas in just 20 minutes. And if I can find this in just 20 minutes of looking, I'm pretty confident that if you spent time working with an agent, working with a property manager, and looking and analyzing a high quantity of deals, you too will be able to find a cash flowing deal in a good market that is an on-market deal. So hopefully this has been helpful to you in figuring out how you can identify places where you should go buy. If you have any questions about this video, please let me know in the comments below. And if you like this video, please let me know in the comments below, because we've never done one like this before, but I think it was a lot of fun. And if it was valuable to you, we'll make more of them. For BiggerPockets, I'm Dave Meyer. Thanks for watching.